Investors looking to fix up their portfolio could do a lot worse today than to add some shares of Home Depot. Between Hurricane Sandy and the already recovering housing market, Home Depot looks like a buy. In the past quarter, Home Depot exceeded Wall Street expectations by about 4 cents, and some of that came from Sandy. People are trying to buy up lumber and paint and wood, try and repair some of the devastation caused by that storm. And it's really going to make a difference when we look at the fourth quarter too. Home Depot was facing a really rough comparison year over year to its what's called comparable store sales, and those are a measure of productivity and profit from individual stores. And it was going to face a mountain to get over this coming quarter, but Sandy is expected to drive people into stores and make that comparison much easier, and to allow the shares to likely rise when we get those fourth quarter results after the new year. I've talked to some analysts who say that could be as much as 100 to 150 basis points added to comparable store sales, which would go a long way to making Home Depot meet and exceed Wall Street expectations. And another thing we have going for Home Depot right now is that the housing market is in recovery. Home builder confidence is at multi-year highs. Housing prices are starting to rise, and housing starts are up as well. And then the last thing that makes Home Depot look especially like a way to improve your portfolio is that its growth rate matches its earnings multiple. And this is not as complicated as it sounds. What we mean by that is earnings are expected to grow 20% year over year in this fiscal year. That was before Sandy, so it'll be more than that. And the stock trades for around 20 times earnings. So that's a classic buy for investors who want value and growth together, to buy a stock when its growth and its earnings multiples line up. And when we look in the space, we also see Lowe's. Now, Lowe's doesn't have the same quality right now as Home Depot, mainly because its earnings multiple and growth rate don't match up as well as Home Depot's.